Hey, it's John Hunter. This week I'm coming to you with 8 of my top tips when getting pre-approved. So these tips really apply to everyone, not just first-time homebuyers. So if you're a seasoned investor, these things may help you out. Some of it you might already know, but I do believe this applies to pretty much everybody. Just so you know, I'm a lender. This is what I do. I'm your trusted advisor. If you have questions on getting pre-approved, or you think you might buy a house in the next year, or if you know somebody who might be buying a home in the next year, I would love to work with them. This is what I do. So regardless of where you live, you can give me a call. And if I can't help you, I can definitely point you in the right direction. So let's kind of get to it. Number one is, you'd think is obvious, but it's not, is get an estimate. So the rules changed a while ago, back in 2010-ish, when Frank Dodd came out. They got rid of the old good faith estimate. They created new rules on the way we do disclosures. It's a little bit more cumbersome to do a loan estimate these days than it used to be. And it actually, there are certain things that if we quote it wrong, we're stuck. We're stuck to those quotes. So a lot of lenders are kind of standoffish on actually giving numbers. So but getting an estimate, whether it be an official loan estimate or not, or a loan summary or whatever they like to call them now, fee breakdown, every lender has like a different name for it. It is your right, and it's something you really should do. So knowing your numbers is key. So even if somebody just reviews it with you, can be very often enough, because the issue here is when you get pre-approved, if you're not 100% sure and you're just assuming you know how much money you need, what your payment's going to be, what are those requirements to get there, what are your options to maybe lower the cost, a lot of times you will find a place that you think you can afford, and then when you get into it and you've already made an offer and your earnest money is on the line, you find out, wait, you get sticker shock when you actually get the formal loan estimate. And that actually is a reason why a lot of people back out and a lot of sales will fail, is that sticker shock, because they did not get an estimate up front and they weren't aware of their numbers. So that's number one. I truly believe that everybody should do that. I think it's my responsibility to make sure you understand what you're getting into, and to hear what you have to hear, not what you want to hear. I try to be conservative. Actually, if anything, I might overquote versus underquoting, because I'd rather surprise you in a good way. So there's that. All right. So number two kind of goes along with number one. It's get a second opinion. So if you're working with another lender and you want another quote, you want to just make sure that you're getting a good deal. Honestly, I mean, that's worth it right there. Is just, even if you stick with the original lender, at least now you have confidence knowing that what you're getting is the best that's out there. Because mortgages are a tough product to shop. They're very individualized based on income, where you live, the price point, credit. All these things can play into it. And you can have two people that would seemingly be very similar from outward appearances get very different deals. And both could be very good, but they could be very different. So it's important to shop around a little bit and get a second opinion, which I welcome. I always try to give my best quote up front, and I often am the one giving that second quote. So if you're working with somebody out there, you want a second quote, feel free to reach out to me. Number three, buyer's agency. The buyer's agent really matters, right? So you have to choose carefully here. Buyer's agents are not created equal. I'm sorry. And your friend of a friend, and your, the aunt or uncle of, somebody at work who does it part-time is very often not a good choice. If they're not doing it as a full-time job, that's a massive red flag. It is a lot of work. And you need to be able to move quickly. You need somebody who does it for a living. This is my personal opinion. I'm not saying there aren't great part-time agents out there, because there are. But as a rule, I'd say if you're a first-time home buyer and this is a new process to you, or even if you're a seasoned investor and you really want to lean on the agent to make sure that you are getting the best deal, that the property doesn't have issues, asking the questions you're not thinking of, a good buyer's agent is just absolutely worth it in every which way. So now granted, that's going to get a lot trickier in the next year. I don't know if you've heard, but there's a bunch of lawsuits, class action suits that just were decided on. Of course, they still have to work their way through the courts, that are all about commissions, real estate commissions, and how realtors are going to be paid going forward, especially as a buyer, is going to change. And so there's going to be fewer buyer's agents out there, and it's going to be a little bit trickier. So this next year we're going to see, and in the coming weeks I'm actually going to do a video or two on that, to try to keep everybody ahead of that. Luckily, any of us that live here in Washington State, our state has been had the foresight to get ahead of it a little bit, and our agency agreements that are going to start here as January 1, I think are going to mitigate a lot of it. We're not going to see the drama that other states are seeing, I believe. So anyway, I digress. So buyer's agency, pick a good buyer's agent. They can save your bacon. They can save your earnest money. They can avoid you from making a mistake on the wrong home by asking the right questions and digging in areas that you might not have thought of. So I have seen it a million times. There's some great agents that I work with. If you want a referral, let me know. I work with some of the best buyer's agents, I think, out there. Number 4 is check your credit. So just about everybody out there is using some sort of credit monitoring these days, whether it's offered by your credit card or your bank or Credit Karma or NerdWallet. One thing that all of those have in common is their credit scores are pretty useless. So it's a great gauge, right? It's just great so you can see, if over time you look at if your scores are trending up or trending down, then you know what's up. You're doing something right or you're doing something wrong or whatever. But using those scores is not a good gauge. So credit scores are not created equal. All the scoring models are very specific to what you're applying for. So if you apply for a car, your score is different than if you apply for a credit card versus if you were getting insurance or a mortgage. They all have different models, right? I mean, leave it to the credit bureaus. They just have all of these different scoring models, where they geared it towards the risk associated with these different products, and they make money, right? So it's a way for them to make more money, and very much so, they're not uniform. So the scoring model, like through Credit Karma and say CreditWise and NerdWallet, very often is what they call Vantage 8. That is a general scoring model. We do not use it. Mortgages use FICO 2. There's very few places to find FICO 2 model that you can pull where it doesn't show up as a credit inquiry, right? So one of the places that I have used personally, and I've referred people to, that I have zero benefit from referring anybody to, is myfico.com. They offer a credit report. You don't want to do the subscription, but if you do the one-time report, it's expensive. I'll tell you, it's close to $60 for a full report, but I love this report. It'll give you the credit scoring model for everything. So it'll tell you if you're buying a car, your score is this. If you're getting a credit card, is this. And even the different variances within those models. So, but they also give FICO 2, which is the score I get. So literally, I've had people were worried about their credit. They'll pull through FICO 2 or through my FICO, get FICO 2, and it is the exact score that I get. There is no other model like that. Credit Karma is more often than not a lot higher than what I get. But when I pulled my own credit, 2 years ago when I refinanced, my Credit Karma score was lower than my FICO 2 score. So it goes both ways. So the bottom line is it can't be trusted. So it's not a bad gauge. It's not a bad idea you can see the detail on things like Credit Karma, but don't trust the scores. So checking your credit. We also do what's called a soft credit pull when we do pre-approvals, which can get one of the credit scores, not all three, but it'll give you one credit score and won't show as a credit inquiry. At least is not a bad place to start if you're worried. And it kind of goes into my number 8 one here, but I'll get to that in a second. Number 5 is buy your house before you buy a car. I can't tell you how many times, especially first-time homebuyers, where maybe they got a new job or they're coming to the end of their lease and they literally come to me to get pre-approved, and they just bought a car, an expensive car with a high payment, and then they don't realize that $600-700 a month car payment equates to about $100,000 in purchase power, right? Defer the car until you get the house, okay? I highly recommend that. It will give you more options. You can always get the car later, but the house obviously is a priority. It's a place you're going to live. That's where your kids sleep. If you are even thinking about maybe buying in the next year, it's important to put your priorities in place. So buy your house before you buy the car. Okay, number six. Now, number six and number seven, I think, are really good preemptive rules to keep in place if you're going to buy within the next 12 months, especially when you get within that 6 month, and absolutely when you're within that 120-day or 4 month window of buying a house. Don't move money around. So if you move money from, say, one account to the other, maybe you have several accounts and you're consolidating them all, do that as soon as possible. Because when you go to get pre-approved and you're within that, say, 90-day window of buying a house, of when you want to close on it, we're going to ask for the last 2 months bank statements. If we see deposits from one account to another, then for me, it's like I'm like this forensic scientist now. All of a sudden, I got to be like, well, where did this come from? Oh, it came from this bank account. I need 2 months of that bank account. Oh, and where'd that deposit come from? Oh, it came from over here. It's a shit show. So, and it can be really frustrating as a buyer where you feel like you're being nitpicked. And believe me, we hate it, because for us, we don't want to ask for all of that. We don't want to have to review all these statements and be, critiquing any deposits and money moving around. So not moving money around as much as you can possibly limit it is just going to limit your hassle factor. So now, number seven is along the same lines: employment changes. If you are unhappy with your job, if you think that you might want to make a change, that the earlier you do that, the better. Switching, like if you are working for the same employer, and let's say you are inside sales and you may want to take a different position, and maybe that new position is commission, right? Realize that changes like that can change the way you qualify. So if you're commission based, that needs a 2-year average. If you've never been on commission before, you could be in a similar industry and then take a commission position, and now I can't use your income at all, no matter what you've made in the past, because you have no history of being on commission, right? If you are on a job or a position that has a whole bunch of overtime, and then now you're going to a position that has a salary with a bonus, well, now I can just use your salary. Even though you may be eligible for a bonus, you don't have a history of it. So any big employment changes, limit those the best you can, or the way you get compensated. Just realize that those type of track records on bonuses, overtime, commission, those type of things matter. Becoming self-employed, same thing, 2 years, right? If you're newly self-employed, they aren't even going to look at you most cases until the 2-year mark. So there are some exceptions to that, of course, but limit it, and it's going to limit your hassle and the amount of paperwork that we ask you for and the amount of explanations we have to ask for. It's just going to make your process a little bit more user-friendly. So now to number 8, and this really kind of is the gist across the board here, is getting pre-approved early, right? Especially as a first-time home buyer. If you think you're going to be buying 6 months from now, it's not a bad idea to have at least a conversation. Not that you have to go through the whole process, but getting your credit checked to make sure that not just that your credit is good to go, because often your credit's good, right? You've been responsible. You've never had a problem getting a loan in the past, but scores can vary, sometimes 50 points one way or the other, right? And every 20 points can change what rate you get. So very often when I pre-approve people, they come to me at the last second, I pull their credit scores. It's too late, given the time frame, for them to affect their scores that will affect the rate that I can give them, right? But if they had come to me a few months prior, I could have said, hey, do this, this, and this, so when you do go to buy a house here in the next 90 to 120 days, we can maximize the credit score to get you the best deal, right? It costs nothing to do this, right? Just to be a little proactive, just to make sure that, am I in the best position? Am I doing what's best? Sometimes it's counterintuitive, right? I have had lots of times where I pull credit on somebody and something that they forgot about shows up. Maybe a collection for a copay that they forgot on some medical visit they had, or some cell phone bill that just popped up, or you know, maybe they were late because there's a credit card they don't use and they had a annual fee that hit and they didn't know about it. And that, I swear, I pay attention to my credit, right? I do this for a living. That almost happened to me. I literally was like within a day of being 30 days late because a credit card I hadn't used in 2 years. I hadn't been checking it, hadn't looked at the emails they'd been sending me. That's my fault. And that almost happened to me. So it can happen to anyone. I'm sorry. It can. So getting pre-approved early, getting a plan together, right? The plan may be slightly different than you think. You may have more options. You may have fewer. You may have one or two things that can help you get a better deal. Getting pre-approved early is never a problem. I've never had anybody come to me and say they wish they hadn't talked to me, or they wish they hadn't talked to me so early, right? I have had tons of people. I have a great client. He's a vet. He was retiring. He called me a year before he retired, and we were able to plan, and the way he was exiting the military, able to get him into a house where he was able to get in and close before he retired using his VA. And that would not have happened if he had waited to call me, and the timing wouldn't have worked for him if we had done it differently. It matters. Planning matters. So, yep. If you missed, did I miss any tip? Maybe did you know something that could help? I would love to hear from you. Right. So please like, subscribe, comment. John Hunter, I'm your mortgage guy. I'd love to help you out if you're looking at buying a house. Hopefully these 8 tips help you. I've got more coming. My next video, I think, is going to be on VA disability and property tax exemptions. I love this one. It's a great one. If you're a veteran, if you have VA disability and you don't want to pay property taxes, you need to listen to that one. That's going to be, if not this week, it'll be Monday, I believe. So please watch for that. Like, subscribe, coming to you every week with this. This week, I have a rate update. You're going to love this news, guys.